Your home and mortgage connection.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
And hello again. Welcome to Ron Siegel Radio. This is the show with no real boundaries as we discuss current events, financial markets, politics, sports, even poking fun at the rest of the media. This is the show that connects the dots of confusion delivered by conflicting media reports. We connect the dots, the actions you can take on your family or business can benefit in current events. Most of all, thank you for joining me. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day. We have a very focused show. We only chat about items that affect the roof over your head, your bank account, and anything I feel would benefit you. And then remind you, if you ever have any home or finance-related questions, I am the consumer advocate looking out for you, and you can reach out to me directly, 800-306-1990, 800-306-1990, or RonSiegelRadio.com. Just remember, that's the number you call anytime for assistance. When you call that number, it comes directly to me first. There are operators standing by.
Quiet, numbskulls, I'm broadcasting.
While I do have a great team when it comes to developing a financing plan or plan to save you money, I personally work with you. Even if you don't have any needs today, save this number in your phone for future reference. 800-306-1990, 800-306-1990. And yes, of course, we are celebrating today. We celebrate every day on Ron Siegel Radio. Love to celebrate. Today is National Blueberry Pie Day. Polly's, here we come. If you are in Southern California area, Polly's Pies. No, they're not a sponsor. They are friends. National Blueberry Pie Day. What's your favorite kind of pie? How about Olala berry pie? I like that one too. Today's also National Superhero Day. So, yeah, that one looks a little better, Josh, than what they have on their site. Okay, so what is your favorite superhero? Put it in the chat. If you're listening to us on RonSiegelRadio.tv in the afternoons, ABC News and Talk, just say it in the car. We'll hear you. It's not like it's Facebook or any of the other medias that are always listening, but we're listening. Now, can you imagine, Josh and I were talking about this before we went on air. Could you imagine if you just mention your favorite superhero and, our phones are always listening to us. Now, if they weren't always listening to us, do you think when you say, hey, so-and-so, not going to say it because it'll start talking and interrupt our broadcast, do you think that it how do you think it knows? Who's your favorite superhero? So I will cause trouble. I'm going to go ahead and tell you my Wonder Woman. Yes, when I was young watching cartoons. Was it Linda Carter? That Wonder Woman? I think so. Josh doesn't even want to put his in there because he doesn't want us to his phone. He doesn't want his phone to blow up with all kinds of garbage coming across. I know that I don't have that on man. Spider-Man. Oh, he's even got it on his desk there. Spidey. Okay. I couldn't handle Spider-Man because he goes up walls, and I have trouble just standing, no less climbing up a wall. But then again, we digress. Okay, so that's our superhero question of the day. Who's your favorite superhero? Again, put it in the chat. If you're listening on a replay, put it in the replays messaging there. We like to watch those things. It's just some fun. Let's see what's going on in the world today. Let's see what's going on in the markets today. The Dow Jones Industrial Average looks like it's down 123.69. S&P is down 44. NASDAQ, down 219. Oil down $1.17. So here's the issue right here. Is that meaningful? I was listening over the weekend, and I get some reports on some of the different Sunday morning shows. You can only watch so many of them, right? My wife gets mad because I watch more than one, but that's a whole different story. So Scott Bessent on one of the Sunday shows talking about the media and how they rightly reported about how the stock market, the S&P 500, was down so dramatically, how the Dow Jones Industrial Average was down so dramatically in the month of April. Now, in true typical media form, they haven't discussed the idea that it's up about 10% just since April 8th, up about 10% since April 8th. Okay, so it did go down from 6,000. Actually, we can look at more precise. It was 61.29 on February 18th. And April the 8th, 49.82. And today we're at 50, almost 5,500. So think about this concept that we hear about all these negative things. Wonder why that would be. Could it be Trump derangement syndrome? Probably. It's amazing how you get the bad gets reported, the good gets ignored, and then you get Hakeem Jeffries and the gang. They're doing another one, and Cory Booker sitting out there on the front of the Capitol steps 12 hours. Guess those guys have no life, nothing better to do with their time than sit there and complain. Now, here's the issue. I don't want you to hear the truth. If the tax cuts do not get reenacted, which they're against, Democrats are all against extending the Trump tax cuts from 2000, his first term. So they're against that. What would that mean if they all expire? How about a 22% tax hike for you and for me and for everybody? Now, it doesn't affect the billionaires. Why? Because they've got great accountants. They're not paying they're not paying right off the tax sheet like the average working American is. They have their tax returns are thousands of pages. They've got corporations and they've got all kinds of tax shelters. They follow the law. Oh, who writes those laws? Yeah, it's the Congress people who are out there complaining about them right now. But are you ready for a 22% tax hike? Well, hopefully the Republicans will be able to get together. And there is no sure thing on the Republicans getting together.
You know better than that.
Because you got some of them saying, we only want to cut spending by $4 billion. Others say we want to cut spending by $1.4 trillion. Big spread right there. But here's the issue, is we were running along for many, many decades, having our spending or our revenue at 17% of GDP. That's the money coming into the government from all sources, 17%. Then we go and we were spending at 20%. Not good.
What's the big idea?
Spending 20% of GDP when your revenue is 17, not good. But in the last 4 years, our spending ballooned to 26% of GDP, while our revenue stayed at 17%. Do we have a revenue problem? Do we have a tax problem? Or do we have a spending problem? Pretty simple where that answer is. The government can't stop spending your money and mine. If they never stop, we'd be in good shape. But as you know, it is what it is. No, it's not a Yahoo. Stop that. Whoop. You got to stop that one. I know I put it in here. It is what it is. There it is.
It is what it is.
You're listening to Ron Siegel Radio, discussing your real estate, current events, and the financial markets. When we come back, got a great broadcast lined up for you today. We've got all kinds of stuff that you need to know about to make your life better. That's what we're here for. We're going to talk about paused your moving plan. Here's why it's time to hit the play again. Should you drop life insurance in retirement? Don't make this mistake. Here's what you need to know without the sales pitch about Medicare Advantage. All that and more. Reach me anytime. Off-air number 800-306-1990, 800-306-1990, or RonSiegelRadio.com, Facebook.com/Ron Siegel Radio. And if you miss any part of our broadcast, Ron Siegel 1 on YouTube, Ron Siegel, the numero 1 on YouTube. Stay tuned. We'll be back in just a few.
Ron Siegel Radio. Your
Are you a veteran, own a home, and need money? The Siegel lending team is here to help veterans refinance and get the money they need. The VA 100 lets you borrow up to 100% of your home's value, refinance your mortgages, consolidate credit cards, and lower your payments by an average of $700 a month. And the Siegel lending team knows that character means more than a credit score. Call 800-306-1990. That's 800-306-1990. Rate subject to change without notice. Licensed by the California Department of Corporations, NMLS 21037, and DRE number 018694552. You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990, 800-306-1990. 1990 and every day at this time, OBMMI. They provide the most comprehensive, accurate, timely, and interactive analysis of pricing ever conducted in the mortgage industry, calculated from actual locked rates with consumers across 35% of all mortgage transactions nationwide. They don't tell us points paid, points received, or the APR. They tell us the number. You need to put in your mortgage calculator to find out what your monthly principal and interest payment will be. If you don't have a mortgage calculator, get it. It's free. rsrlinks.com/mobile app. rsrlinks.com/mobile app. What did rates do on Friday? They were all down. Conventional 30-year fixed, 6.756. Jumbo 30-year fixed, 7.013. FHA 30-year fixed, 6.492. VA 30-year fixed, 6.301. USDA 30-year fix, 6.385. Every one of them are down. If you want our market commentary each and every business day morning, as early as the data allows, we do put that out there for you. rsrlinks.com/market minute. rsrlinks.com/market minute. Let's take a look and see what the markets are doing today. We start out with the S&P 500. That one is, let's see, we're down 41.82 right now. We've got the 10-year Treasury. That one's down 3 basis points. The mortgage bond, that one is up ever so slightly. That's up 1 basis point on the 5.5% coupon. The question becomes, when are you going to feel the effects of China tariffs? Or will you feel the effects of the China tariffs? It's kind of funny when we talk about the China tariffs. We hear all what's one of the biggest things you hear people talking about? Is it one that's really important? No, not really. Because they're using one of them as being, what's it going to do to the cost of the Apple iPhone? Does it really matter? Is that one of the biggest things out there?
You know better than that.
Well, it's already happening. As I've shared with you right along, what happens? Well, you move the supply chain, and now they're up to 20% of the iPhones are now being made in India. Yeah, they've already moved it. They're opening up the plant here in the United States, but already 20% are being made in India. So are they all going to have that big increase in price? Who knows? But, if anybody has enough money to subsidize, Apple probably has the cash on hand that they could subsidize whatever they want. I mean, when you really think, what do they have? I don't know, 60, 70 billion dollars in cash on hand, maybe more than that even. It's crazy. So don't get the tin cup out just yet for Apple. They probably are going to do just fine. But let's take a look. LendingTree conducted a survey, 2,000 individuals aged 18 to 79 years old, and asked them questions on buy now, pay later, BNPL. So it's a payment method that allows customers to purchase goods or services and pay for them in installments over time rather than upfront. It's essentially a short-term loan that breaks the total cost of a purchase into smaller fixed payments. Of those surveyed, half reported using BNPL and 41% reported being late in the past year, unlike other formats of debt, so long as someone is not exceedingly later and the lender doesn't send it to collections, it typically does not impact the credit report. 1/3 reported that they used BNPL to bridge the gap to the next paycheck, which is a scary thought. Additionally, 25% used it for groceries, 48% regret using it, and 50% are planning on using it in the next 6 months. These stats are just another example of how the consumer is stressed, is loaded up with debt, and likely will have very little, if any, discretionary spending. Remember, almost 70% of GDP is consumption and consumer spending. And if that continues to slow, weak growth and a potential recession could be ahead. Now, if people aren't spending, how does that affect inflation? Well, they're not buying the things, so the inflation isn't there. Obviously, you got to buy food and energy, but those are not included in core inflation numbers. Many are wondering when the effect of tariffs will start to impact them directly, mapping how long it takes for shipments to get from China to the U.S. on average. From China, it's basically from China to the consumer, 60 days, 14 days to 16 days on the water. Plus, you've got other inland transportation, distribution, getting it to the stores, getting it to you. Based on when the tariffs were implemented, around Mother's Day is when we should start to see shelves depleted for items that were imported from China if people are buying them. Start to feel the impact of this supply shock, not like COVID, but there'll likely be price shocks and jobs could be impacted under the unloading the containers, transporting the goods, manufacturing the goods. All these jobs could be somewhat at risk. This could cause the unemployment rate to rise and needs to be contemplated by the Fed. Do you think they're contemplating any of these things? Well, you know my feeling about the Fed. It's pretty simple.
Such an idiot. Such an idiot.
Cotality. Talk about another interesting one. Used to be called Core Logic. Now, I don't know who came up with the idea of cotality. Reported that rents were up 2.9% year over year in February, even with a bump higher due to the fires in California. The 2.9% reported by Cotality is much lower than 4.1% in the CPI and PCE reports. If they were caught up and based on the weightings, CPI would be 2.3% from 2.8, and PCE 2.6 from 2.8 for the latest readings. Bottom line, inflation is already making good strides in the latest reports, and we expect more this week with PCE. Of course, these reports were before the tariffs, which may cause a one-time price increase, but things were heading in the right direction and closer to the Fed's goal. That is the Mortgage Minute, brought to you by our friends at Geneva Financial when you're ready for that next home loan. Geneva's got the programs and the products. You just need to make the call. 800-306-1990, 800-306-1990. And yes, we're expecting a lot of data this week. Why do I mention that? Well, if you're working on a home loan, you know, when you're dealing with a professional, you're not going to get this from the onliners because their job is just to churn and burn. They're not in the guidance business. Nothing against them. Churn and burn works for some people. But when you're in the guidance business, you're trying to forecast where the markets are heading, not where they've been. Oh, maybe other than if you're in the Federal Reserve, because they like to look backwards. But here's the issue is when we look at right now and you say, oh, what do I want to do? I want to lock this loan or do I want to hold it? And then again, our team will do second looks for you to give you some guidance. Doesn't cost you anything. We'll look at it. And if we need it, if you need something, you can generally get a loan done in 10 to 14 days if we have to. But this week, we're going to get a lot of data. When I look at the reports of data for the week, wholesale inventories comes out tomorrow. The Case-Shiller home prices comes out tomorrow. Consumer confidence comes out tomorrow. JOLTS comes out tomorrow. On Wednesday, we get the ADP jobs report, the core PCE. That's the price inflation numbers that are very, very important. On Thursday, we're going to get Challenger layoffs. That's one that we watch, the ISM manufacturing. And the big daddy of them all comes out on Friday. That's the non-farm payroll numbers. Unemployment rate, that's on Friday. So when we talk about those issues, the reason I bring all of that up is because we look at technicals to give us guidance, the technicals of the charts to give us guidance on where the markets are heading or how we can forecast markets. But all that goes out the window when you've got it, when we're dealing with the when we're really dealing with lots and lots of data. And boy, do we have data coming out this week. So it's going to be a rocky road. So that's why I'm sharing with our personal clients, our private clients. You know something? Unless you are really, really into risk, and I am not, let's lock up those loans at the numbers we know today. They might get better. We don't know. But, you know, do you want to take, when you're dealing with your home loan, your largest liability, do you want to take on any extra risk? I'm going to suggest risk and surprises. Those are good for birthdays. Those are good for Mother's Day, for holidays. I don't like surprises when it comes to finances. So I like to plan. And we have this much data coming out. Good data means the market can go one way. Bad data means the market can go another way. And we don't know. The one thing I know for sure is the market's going to overreact, because it always does. And I know that the jobs report on Friday will move the market, but it'll be wrong. And I don't know why the markets are so infatuated with the jobs report, but it is. And that jobs report always comes out wrong. They plan for it to be wrong because they give us the modifications for the first month after and the second month after. So on Friday, we're going to get the April jobs report, and we'll get a first revision for March, and we're going to get the final revision, so to speak, for February. And then QCEW, the Census Bureau, will come back and tell us the Bureau of Labor Statistics got it all wrong because they do their modeling, or they do their reporting based on requiring businesses to answer their survey. They're required. So when they answer their survey, it's the most accurate, and they come back every 6 months and tell us how wrong the prior reports were. Just amazing. You're listening to Ron Siegel Radio, discussing your real estate, current events, and the financial markets. When we come back, paused your moving plans? Here's why it's time to hit play again. Should you drop life insurance in retirement? Don't make this mistake. Medicare Advantage confusion? Here's what you need to know without any kind of a sales pitch, because we don't sell it. You can reach me anytime. Our off-air number, it's 800-306-1990, 800-306-1990, or RonSiegelRadio.com, Facebook.com/Ron Siegel Radio. And if you miss any part of our broadcast, Ron Siegel 1 on YouTube, Ron Siegel, the numeral 1 on YouTube. Stay tuned. We'll be back in just a few.
Ron Siegel Radio. Your home and mortgage connection.
Confused about the home buying process? Or curious how much you really know about buying a home? Take the First Home IQ quiz to test your understanding of buying a home. Created by the nonprofit First Home IQ, this 5-minute quiz will give you a score, what you missed, and why. Take the quiz in 5 minutes at rsrlinks.com/FHIQ and find out what you need to know about buying your first home. That's rsrlinks.com/FHIQ.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's...
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering every day on Ron Siegel Radio. Or anytime at 800-306-1990, 800-306-1990. The real-time real estate segment today being brought to you by rsrmoney.com. rsrmoney.com. Pause your moving plans? Here's why it's time to hit the play again. It's not really a surprise that 70% of buyers paused their home search last year. Maybe you're one of them, and if so, no judgment. Conditions just weren't great. Inventory was too low, prices were too high, and mortgage rates were bouncing all over. That made it really hard to find a home you loved and could afford. And why sell if you're not sure where you're going to go? But here's the thing, the market's shifting, and it might be time to hit play again. The inventory sweet spot More homeowners are jumping back into their search to make a move this year. Builders are finishing more homes, and together, that's creating more options for you when you move. Maybe even the home you've been waiting for. More homes equal more possibilities, but there's more to it than that. When you sell, you don't want to feel like it's impossible to find your next home. At the same time, you also don't want inventory to be so high it takes ages for your house to sell. Right now, you'll get the best of both worlds. This data will help paint the picture for you, according to Realtor.com. Inventory has jumped 28.5% since this time last year, but it's still below pre-pandemic levels in most markets. And here's why this is such a sweet spot. If you're watching us on RonSiegelRadio.tv, any of our socials, or the ABC News and Talk AM 1490 FM 98.1 video feeds, you are seeing the supply of homes for sale is improving, but still low. Basically, there are more homes to choose from when you make your move, but not so many that you'll struggle to sell your current house. Your home should sell quickly if you work with an agent to make sure it's priced right and prepped to impress. Do you want to know what your home value is? Or what's going on in your marketplace is even more important. What's the competition like? Well, we've got it for you. rsrlinks.com/market report. rsrlinks.com/market report. Go in there, put your zip code in there where you're selling. You'll be able to see what the competition looks like. How many houses are for sale? How long have they been on the market? Prices going up, prices going down. It's all right there. Want to know what your property is worth? Well, we've got you covered there too. rsrlinks.com/homewealth. rsrlinks.com/homewealth. We'll give you put your address in there, and we'll give you the reporting on what your home is worth. Pretty simple. We do all the work for you. Now, if you're thinking about selling, don't ever forget the Home Seller's Guide. rsrlinks.com/HSG. That's our Home Seller's Guide. It is available to you for free. So, more options, less chaos, solid demand. That's the real sweet spot. But here's something else to consider. And I give you the data from Realtor.com also shows inventory has been on the rise for 17 straight months. And experts agree it's likely to continue climbing throughout the year, as Lance Lambert, co-founder of Resi Club, explains, quote, "The fact that inventory is rising year over year strongly suggests that national active housing inventory for sale is likely to end the year higher," unquote. So this may actually be the best time to sell. Your house may stand out more than it would as the year goes on and inventory grows even more. Wait too long, and you may be one of the many trying to stand out later this year. You know, again, as I share with you all the time, I am a real estate agent. I've been licensed for 10 years. I've never even used the license, but I go and I get to do all the work for it. Josh knows how to do all the paperwork. I don't even know how to do that, right? But I do know how to put you in touch with agents that are really well qualified anywhere within the sound of my voice. So all you have to do is reach out to me, because I can give you all kinds of stats on every agent or nearly every agent. And with the issues that are going on in the marketplace right now, buying or selling, you need to have somebody really, really good on your side, not someone that's just going to save you a commission for a minimal amount. Bottom line, if you've been waiting for the housing market to give you a sign, it just did. Whether you're looking to move up, scale down, or relocate completely, this might be the best balance we've seen in a while. What's holding you back from taking advantage of this sweet spot? Give me a call again at 800-306-1990, 800-306-1990. Let's chat about your situation. You know, I talk on radio every day, but, you know, that's a general issue. What you want, what you need, that's specific to you. And we can have that consultation. Book rs15.com, bookrs15.com, and we can have a quick consultation and see how I might be able to help you. That's the real-time real estate segment brought to you by rsrmoney.com, rsrmoney.com. So what's going on in your world? A lot of stuff going on out there right now. But I don't know if we've got 7 listeners. I know we have that. Anybody go to Stagecoach this year? It's amazing. Josh, you have your own. Do you guys have do you have something like Stagecoach coming back yet? I know they had. Yeah, that one was a catastrophe, a tragedy in Las Vegas. I didn't know if it would ever come back out there, but it's not too far. What is it, 3 hours to get to Stagecoach from Vegas, give or take? Well, 100,000 people out there. And it's amazing because you buy your tickets in November, and it's like a big guess as to what the weather's going to be like out there. I don't know about you. I like the idea. So I did watch some of Stagecoach, but I didn't go. I got it right from the comfort of my own living room. I had it on my big screen. You can put it on the sound bar. When you go to Stagecoach, how are you watching it anyway? On the big screen with 100,000 of your closest friends. This time, I guess they had a lot of wind and a lot of cold. So how do you even know what to dress for out there? I like it my own. Maybe Josh, is it because I'm old? Is that it? That I'd like to go. I like going to concerts. Right? You go to a concert, you know what you're going to get. Now, I watched Jelly Roll. Okay, and I resemble Jelly Roll. I don't have any tattoos, but I am the same size and losing weight, just like him. But I don't think I've got the budget that he does. But I don't know if he was an MC or a singer this year, because you brought out a lot of different acts on there, and I like Jelly Roll's music. Maybe Luke Combs did it good last night. That's a good one. Okay, so I digress. Where are we heading with this, Josh? I think I've got totally derailed on our topics of the day today, but oh well. Let's see. Get back to our conversation about housing and markets and finance and all the good tools that are going on out there. So you're thinking about buying a house. Okay, we just talked about that. And when was the best time for you to buy a house? I'm going to tell you very simple. 10 years ago. Right? Prices were lower, interest rates were lower, all of that was going on. But I'm going to tell you this other part of it. When's the second best time to buy a house? Now. And why do I say that with these other issues? With all these other things that are going on? Why do I say now is the second best time? Well, it's simple. Prices are going up. If we go into a recession, prices historically have always gone up. There was 2 times when prices didn't go up during a recession. And one time they were up 1.9%. The other time they were one time they were down 1.9%. The other time they were up even more dramatically. Holy cow, I got my tongue. Is it Monday? Got the tongue tied. Maybe I watched too much Stagecoach and didn't sleep enough. 1991, prices were down 1.9%. 2008, prices were down 19.7%. Those 2 recessions since 1980 are the only 2 recessions we've had where prices have gone down. Now, I would submit to you, 1991, 1.9%, not a big deal. 2008, the recession did not cause prices to go down. Prices going down caused a recession of 19.7%. So what I'm saying to you is the bottom line here is real estate values go up during a recession. 1980, 6.1%, 1981, 3.5%, 2001, 6.6%, 2020, 6%. Real estate values go up almost every time during a recession. If we are heading into a recession, and a lot of economists believe that we are, real estate values will go up. Okay, so what's the flip side of that? Well, when we go into a recession, interest rates go down. Every time since 1980, they've gone down. Every time since 1980, real estate prices go down. Real estate mortgage rates go down. So the bottom line here is buy now before the rates go up. Get whatever mortgage you can. Get a rebate. Pay a higher rate. I just consulted with somebody and showed them numerically for their situation. Paying a higher rate was in their best interest. On the flip side, going and restructuring that loan in 6 to 12 months, if we go into a recession and if history repeats itself, the real estate values will be higher and the interest rates will be lower, and you'll be in a better position to restructure that loan. Don't wait. Give us a call at 800-306-1990. We'll run a plan for you. Work off of your plan. You're listening to Ron Siegel Radio, discussing your real estate, current events, and the financial markets. When we come back, should you drop life insurance in retirement? Don't make this mistake. Medicare Advantage confusion. Here's what you need to know. No sales pitch here. You can reach me anytime. Our off-air number, 800-306-1990, 800-306-1990, or RonSiegelRadio.com, Facebook.com/Ron Siegel Radio. And if you miss any part of our broadcast, Ron Siegel 1 on YouTube. Ron Siegel, the numeral 1 on YouTube. Stay tuned. We'll be back in just a few.
Ron Siegel Radio. Your home and mortgage connection.
Do you know a homeowner experiencing divorce? Do you know a real estate reference and the divorce decree could cost tens of thousands of dollars? A certified divorce mortgage planning and real estate report could save you thousands of dollars, and it's free from your local certified divorce lending professional. Reach out to Ron today. RonIsMyLender.com. Again, RonIsMyLender.com. Licensed under NMLS 217037, Equal Housing Lender.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990, 800-306-1990. 1890, the Borrow Smart segment today, being brought to you by GetHomeselect.com, GetHomeselect.com. Life insurance. Should you drop life insurance in retirement? Don't make this mistake. Ron Siegel here, your host of Ron Siegel Radio, where we don't just talk about homes and finances, we talk about building real security for you and your family. Today's hot topic: should you drop your life insurance coverage once you retire? It's a question I hear all the time. After all, the kids are grown, the mortgage may be lower. Do you still need it? Here's what most people aren't thinking about. Yes, one reason for life insurance is to replace lost income if you pass away early. Doesn't everybody pass away early? I don't know anybody that passed away late. But that's only part of the story. Life insurance can still play a powerful role in your retirement strategy, even if you're not relying on a paycheck anymore. Let me give you 3 questions to ask before you even consider canceling that policy. Number 1, does your policy have cash value? If it's a whole life policy, there should be significant cash accumulation built up over the years. Canceling without understanding this is like throwing away money you've already saved. Cash value policies may even give you flexibility for loans, premium payments, or extra liquidity. Number 2, are you going to face estate taxes? If your estate is large enough to hit those federal or state estate tax thresholds, life insurance proceeds could help your heirs cover that bill without having to sell off real estate businesses or investment accounts under pressure. Number 3, are you still carrying a mortgage or other liabilities? Even in retirement, many households carry a mortgage, home equity loan, or other debt. Life insurance could be the tool that helps your family stay in the home or keeps other financial plans on track, even if something happens to you. Here's the bottom line. Don't make the mistake of viewing life insurance as a set it and forget it product. And definitely don't make decisions without seeing the whole picture. That's why we offer a 30-second liability check, including a soft credit pull that won't impact your score. We'll help you assess not just your insurance, but how all your liabilities fit into your retirement plan. Visit rsrlinks.com/SORA, SORA, to get that liability checkup to start today. I am Ron Siegel, your Certified Liability Advisor. I focus on helping families build wealth through strategic debt management. That is the Borrow Smart segment, brought to you by GetHomeSelect.com, GetHomeSelect.com. I think we have time for another Borrow Smart segment for you today. Borrow Smart, brought to you by GetHomeSelect.com. Simply the best loan on the market. Medicare Advantage confusion. Here's what you need to know without the sales pitch. Ron Siegel here, and today we're talking about a topic that touches nearly every household approaching or in retirement, or if you have a loved one that's approaching or in retirement. Medicare Advantage, sometimes known as Part C. Now, before we go any further, let me be clear. I'm not selling Medicare plans. I'm not licensed for that, and that's not what I do. What I do as a certified liability advisor is help families make smarter decisions that protect their retirement dreams and household wealth. Healthcare costs can be one of the largest liabilities in retirement, right alongside your mortgage and taxes, and that's why understanding your Medicare options matters. Medicare Advantage plans are offered by private insurers working with Medicare. They often bundle your hospital stays, Part A, medical coverage, Part B, and sometimes prescription drug coverage, Part D. Some plans even throw in dental, vision, or hearing. Sounds great, right? Well, maybe, but here's the catch. Every Medicare Advantage plan comes with its own set of rules, different copays, varying out-of-pocket fees, and even restrictions on which doctors you can see. Some plans require referrals to see a specialist. Others might not cover certain medications you count on, and these plans can change year to year. But what worked for you last year might not work next year, but here's the problem most folks miss. Choosing the wrong plan isn't just an inconvenience, it can create real financial stress down the road. It's why I recommend that Medicare planning shouldn't happen in a vacuum. It needs to be part of your bigger retirement, liability, and estate conversation. If you're unsure whether your current Medicare choices line up with your healthcare needs and financial plans, let's connect. We offer a simple, no-pressure liability check where you can review your situation, including a soft credit pull that won't impact your score. And when appropriate, I can introduce you to trusted Medicare professionals who specialize in these plans. You can start that process, rsrlinks.com/SORA, rsrlinks.com/SORA, because retirement is supposed to be your reward, not a season of financial surprises. That is the Borrow Smart segment, brought to you by GetHomeSelect.com, GetHomeSelect.com. Hey, how about a few giveaways? I think we've got a little time today to chat about some things we can give away today. In the earlier part of the broadcast, we talked about buying a house or selling your house. So we talked about the Home Seller's Guide, rsrlinks.com/HSG. We have two buyer's guides for you. They're both free. Our annual guide, rsrlinks.com/HBG2025. rsrlinks.com/HBG2025. And we've got the quarterly update, rsrlinks.com/HBG. rsrlinks.com/HBG. I think we've got a new one coming out early in May, I believe it is. Not positive, but I think it's early May the new one comes out. So there's a couple of them for you. If you're worried right now, and there are some people, and I've seen some files coming across and some scenarios coming across where people are looking and saying, you know, I'm looking at buying this house. There's still houses in Southern California that are selling over asking price. And then you get into this discussion, what happens if the appraisal doesn't come in? Well, we've got you covered. rsrlinks.com/appraisal gap. rsrlinks.com appraisal gap. Got you covered right there. So, and you know, I've heard some folks talking lately about buy downs. Now, buy downs make sense in some situations. It's all about your strategy. And as you know, I always tell you, strategy beats rate. Always. Strategy beats rate always. Are buy downs a good thing? It depends. Depends on your situation. We go through and explain the entire buy down process in a radio program that we did, and you can go right there and look at it. rsrlinks.com/buy down, rsrlinks.com/buy down. We go through the different buy down scenarios. Now, why do I say it depends? Well, sometimes you need to use that buy down to qualify for the next bigger house, because the permanent buy down, there's a temporary buy down and a permanent buy down, but the permanent buy down is used in qualification purposes. And in many instances, if it's done properly and in conjunction with the seller, you can actually drop the payments by 1 to 1.5%. You can drop the interest rate by 1 to 1.5%. Now you got to do it the right way. That helps you qualify for more if you're using the buy down process. Now, if you're not using the buy down process, well, then maybe the answer is not going that direction. So you want to understand it. Watch the video. Call me with questions. rsrlinks.com/buy down. And last but not least, if you're one of those people that has a lot of debt, go dancing. Now, there's a lot of people that probably went dancing last weekend at Stagecoach. The two-step, rsrlinks.com/two-step. It's a two-step process. Pay off the debts in step 1 and get that permanent financing in step 2 when it's strategic. If you want to go right to step 2, just understand what's your number. No, I'm married. I can't ask you your number. rsrlinks.com/what's your number. rsrlinks.com/what's your number. You got to know the number when you're talking about strategic financing. rsrlinks.com/what's your number. And as always, I ask, set that first radio preset button to come back here and join Ron Siegel Radio, where we only speak about items affecting your house and your bank account. Thanks to all of our sponsors. Big thanks to Josh and Sean for engineering us today. And of course, a special thanks to you for spending a little bit of your time with us. That's all for Ron Siegel Radio. Again, if you have any questions or to meet any of our guests, call me anytime. 800-306-1990, 800-306-1990, or ronsiegelradio.com. And remember, make a lot of money so you can help a lot of people and have a lot of fun. Have a great day. We'll talk to you next time on Ron Siegel Radio.